Hello viewers, welcome to my channel. Today we are going to see RTP December 2023, sum number 12, account current. From the following, prepare an account current sent by A to B. Means we are going to prepare B's account. Otherwise also you will be noticing from the transactions given to you, it's all sold goods to B returned goods. So A is in his books, he is going to prepare account current of B. So B in account current with A. You should write like that on for the year ending 31st March 2023 by means of product method, charging interest at the rate of 5% per annum. So first we have to write the journal so that you will be able to do it very coolly. So it is a personal account. So we have to start with V in account current with A and give the interest at the rate of 5% up to 31st March 2023. I'll teach you a very easy method. Instead of getting confused whether I should debit the B's account or I should credit the B's account. So it's a very simple golden rule regarding the personal account. Debit the receiver, credit the giver. If B is receiving, you just debit him. If B is giving, you just credit him. That's it. So first one is a balance due from B. So he has to give and we have to receive. Okay. So he has already received this amount. So it will appear on the debit side because he is a receiver here. So you are going to write to balance brought down. Balance brought down, the amount will be this. It means that this amount was due from him not on 1st January. It was due from 31st January. So while calculating the number of days from the due date, you have to be careful about that. The amount due from him is rupees 1800. For easiness, I have already calculated the number of days and I'll just explain to you. See here, this amount is due from, because there is no due date given. So this is opening balance. This is already due on 31st December. So you have to take it from that date. So this date 1 will be included. So you have to take full 31 days in January and February 28 and March 31. Up to the date given in your question, this is given here as on up to the date of 31st March 23. So you have to take up to 31st March, the total comes to 90 days. So I am writing here the number of days due. Over. So second thing, we will be multiplying the product later, or shall we do it right now? So what we have to do, we have to multiply this 90 into 1800. That will be our product. This will be 1,62,000. This is the due number of days due. This one and this one. I'll write here. Suppose this is your column number 1, 2, 3, 4. This is column number 4 and this is column number 5 and this is 4 into 5. Column number 4 into 5. This is your column 1 and this is your column 2 and this is your column 3. You need not write the column just for understanding. Understanding purpose. I am just giving you the column. So just first one is over. Second one, see here, sold goods. So who is the receiver here? This is in the books of A we are writing. So I have sold goods to B. So B is the receiver. So receiver has to be debited. So I am writing on the debit side to sales account. No need of thinking the journal at all. Straight away you can think whether this B is a receiver or a giver. he is a receiver because I am writing in my books I have sold goods to B. So B has received it. So what is the amount? 1500. And here they have not given the due date. So we have taken the due date as January 10. So in the month of January, 21 days were left and 28 for February and 31 for March. The total comes to 80 days. So I am writing this 80. Very, very simple question. So 80 into 1500 will be 1,20,000. Hope it's clear to you now. Now the next transaction. B returned goods. Now who is the giver? He is the giver. He gives the goods to us. So you have to go to the credit side. Buy, sales, return account. No need of getting it confused. What I should do. Okay. Whether I should write the journal and waste the time. Don't waste the time. Make it very, very faster. Buy, sales, return account. Now, here also the due date is not given. So, we will be taking this date as the due date, January 15. So, in the month of January, 16 days were left and 28 in February and 31 in March. You write like this and make the total. 75 days was the number of days from due date. So what is the amount? Amount is 650 rupees. You can make the product column here also. It hardly matters. You can make it here or you can make it here. So 75 into 650, 48,750. You can use your calculator and do it in a faster manner. So this is also over. Now be paid. Who paid? P paid. So he is the giver. So go to the credit side. So credit the giver by check account. It means by bank account. He paid a check. He paid a check for rupees 1,000. The due date is February 12. No due date given means take the date as due date. So February 12. So from February 12, only 16 days were left plus March 31. The total days comes to 47. Now the product is 47,000. Very, very easy. Okay. So moving on to the next one. Now here see B accepted a bill drawn by A. So it is a bill drawn by A. Always the seller will draw the bill. So what is your journal entry? Bills receivable account, because we are writing in our books. This is my book. So what I will write in my book? Bills receivable account debit. The moment, first what I would have done while selling the goods, what I would have done? B account debit to sales account. Now this B has given me, he said that please don't keep my name, take the bill. So now he has given the bill. So I have to credit B. So bills receivable account debit to B account. So this will appear on the credit side. So come to this side. So the amount is, and the bill is for 1 month. So 1 month means this is on February 20. Simply this is 1 month means 22. So 1 month means you have to add here 1 and 3 days grace period. So 23 March. So 23 March is the due date. So from March 23 we got only 8 days left for 31. So my days from the due date is 8 days. So you have to write here by bills receivable account. I hope it's clear to you. Even still, any problem persists or you are confused, don't hesitate. Just leave a comment. I'll be clarifying it to you one more time. So 1500. So this will become 12,000. So now this is also over. Next one, again sold goods. Means he is the receiver. Debit the receiver. Go to your golden rule. This is on March 11. March 11 means in March only 20 days left out. So what is your number of days from the due date? It is 20. So first write this. And what is the amount? Sold goods, we know that he is the receiver. So debit the receiver to sales account. If it is purchases, we purchase from him. He is giving goods. So he is a giver. Then you go to the credit side. But here it is sales. So I am writing here the amount as 720. So if you multiply that, this will become 14,400. This is the product. Okay. So now moving on to the next item. On March 14, received cash from B. So B is the giver. Simply go to this side, by cash account. How much he has given? 800 he has given. On which date? March 14. There is no due date. So March 14 is taken as the due date. So in March, how many days left out? 17. So I am writing this 17. And what is the product? 17 into 800. 17 into 800. That gives you 13,600. So now our work is over. Very, very simply it is over. So now what we have to do? Now we have to first find out the balance of product. Then we will go for interest calculation. So we have to add the product. Now what is this amount? 1,62,000 plus 1,20,000 plus 14,400. So this total comes to 2,96,400. Again, please, students are getting confused in this, where I should write the amount. Don't think like that. Understand, these are the amounts receivable from him. These are the amounts A has to give him because he is a creditor for this amount. And for this amount, he is a debtor. So the receivable amount is more, then write the interest also on the debit side. If the payable amount is more, then write it on that other side. Okay. So one thing you remember, automatically the other thing you can do. If the receivable amount is more, write the interest amount on the debit side. So now copying this 2,96,400 on the other side. It is just a ledger account. We are balancing the ledger account. So 48,750 plus 47,000 plus 12,000 plus 13,600. The total comes to 417. I think I just made a mistake. 48,750 plus 47,000 plus 12,000 plus 13,600. The total is 1,21,350 minus 296,400. The amount is 1,75,000. The balancing figure is 1,75,050. So this is the by balance of product. By balance of product. So for this amount only, we are going to find out the interest. So you have to write the formula here like this. Balance of product into rate into 1 by 365. Why we write 1? Because we have already multiplied by the number of days from the date of receival or date of payment. We have calculated already the number of days. We have multiplied it by that. So we have to write only 1. So now this is 1,75,050. Just replace it. And rate is 5 divided by 100 into 1 by 365. 5. You can make a round of the figure. So I am going to find out 175,050 into 5 equals to divided by 36500. So it is around 23.97 979. So let me take it as round of 24 rupees. So what you have to do, because the receivable amount was more, you have to write the interest account on the debit side. You have to write the last date March 31 to interest account. I'm writing it short. So in this amount column, write this as 24. Isn't it? Yes, 24. So now we are going to total this amount. So the amount is 1800 plus 1500 plus 720. For this, the interest comes to 24 rupees. So the amount receivable from B is 4044. What is the amount payable? Payable to B is 650 plus 1000 plus 1500 plus 800 minus this one 4044. 4044. So this amount is receivable from him. So in the amount column, write 94 and make this balance as 4044. Just like a ledger account. So this will be by balance carried down. That's it. It's not at all a tough one. Only thing is that keep in mind this part. Keep in mind the first balance brought down. It is due from. So he has to give us. It is a receivable amount right on the debit side. And the date, just don't forget, include this January 1 also. Otherwise, for every due date calculation, just leave the date of the transaction and then calculate it. So I have given you very clearly here the number of days, how it is calculated. And I said very clearly that you need not to think about the journal and then get confused. You have to be very fast and smarter than working hard. So any amount, if he receives, B receives, debit the receiver and credit the giver. Just follow the golden rule for personal account. And if you make any sales, he is the receiver. If you purchase anything from him, he is the giver. And if he makes the payment, he is the giver. And if we make the payment, then he is a receiver. That's it. I hope it's very clear. Still, any confusion, anything, please let me know that. I'll be glad to answer your queries. And really, again and again, thank you for all your support. Thank you. Keep learning and enjoy studying. Thank you.